Hello folks, today I want to talk about why I bought more Alibaba shares even though its recent earnings report was pretty average. Specifically, I want to talk about the recent convertible bond sale that Alibaba conducted to finance some of its share buybacks, how Alibaba's management is focusing on investing in the hottest sector right now, AI, and how Alibaba shares are currently trading at a strong resistance level which presents a good buying opportunity. But before we begin, most of you are not subscribed, so please hit that like and subscribe button to get instant updates when I post Alibaba videos. And also, I'm not a financial advisor, so take all my content with a grain of salt and seek professional financial advice if you need to. So let's talk about the convertible bond first. Essentially, Alibaba raised $4.5 billion in debt in order to buy back more shares. Initially, the stock sold off on the news, but the price has since stabilized somewhat. And the main criticism about the bond issuance is that it defeats the purpose of buying back shares if they're going to be converted back into shares at some point. Now that is an understandable concern, but according to this article, the convertible bonds cannot be converted into shares until the share price reaches above $161.60. So that's a doubling from current prices, which is more than good enough for me. So it's not like Alibaba is going to raise all this capital only for it to be converted into more shares after just a few months. Eventually, yes, a portion of the bonds will be converted to shares, but not all. And in terms of the cost borne by Alibaba by undertaking this issuance, it looks like the interest paid is so low at 50 basis points that the interest expense will be almost negligible. And in turn, Alibaba gets to reduce its total share float by nearly 15 million ADSs. That might not seem like a lot, but it's definitely better than nothing, especially if you consider that Alibaba will be getting this money for free. Well, nearly free. So another reason why I bought more Alibaba is that it is doubling down on AI. According to the latest investor letter from Joe Tsai and Eddie Wu, they are not only returning cash to shareholders in the form of a dividend and share buybacks, but also they are investing in its core business, which is e-commerce, and new technologies such as AI. Alibaba already has a leading position in the cloud in China, and it now has solid LLMs like Qwen alongside equity investments in leading AI startups like Moonshot and Minimax. Joe Tsai further reiterated this pivot to AI in a video interview posted a few days ago at a JP Morgan conference where he explained that there are not many companies like Alibaba that have both a cloud and AI presence.
I think Alibaba is actually probably one of the very few companies that both have proprietary in-house AI capability and also a cloud business. If you think about it, Microsoft and OpenAI are two separate companies. They have a very nice partnership right now, but maybe in the future they'll maybe go their separate ways. So Microsoft actually does not have their proprietary development of AI. They basically outsourced it to OpenAI.
Right.
Amazon is in the cloud business, but they don't have proprietary AI that they develop themselves in terms of large language model. Facebook has their large language model, which they open source, Llama, but they don't have a cloud business. The only American company that has sort of both internal, in-house, is Google, but Google is number 3 in cloud, and AI is, some say they're not as good as OpenAI, right? But so you come to China, you look at Alibaba, we're the only company that both run a leading cloud business and also we're competitive in AI.
Finally, Alibaba's stock is sitting at a great buy point from a technical perspective. If we look at the weekly chart, the price is currently sitting on long-term support. By long-term support, I'm talking about the 40-week exponential moving average. We are currently at a crucial juncture in Alibaba's path back above $100. If the stock can bounce off this long-term EMA, then that'll be further confirmation that the bottom is in. That's one of the reasons why I bought more Alibaba stock earlier in the week. I was anticipating a bounce towards the end of this week, but unfortunately it didn't really happen. With that said, I want to see Alibaba stock finish above $80 next week. If it continues to fall, then it might go back down to $70 and even $60 after that. In that case, I'll begin to look for an exit, but let's hope it doesn't come to that. Regardless, keep in mind that Alibaba is currently trading on a forward PE of less than 9. That's pretty low for a tech stock, and even though it's not a high growth company anymore, Alibaba is at the forefront of some groundbreaking technology in the form of generative AI, and I firmly believe that further investment in this sector will pay dividends down the road. That's it for today, folks. If you haven't already, please hit the like and subscribe button for more Alibaba videos. Thanks for watching and see you next time.